I'm Cynthia Rowland, and this is episode 61 of EO Radio Show. Today's episode falls in the category of highly technical areas of public charity qualifications for charitable organizations. Last year, in episodes 23 and 24, I covered the complex rules that describe supporting organizations, which are a special classification of public charity for U.S. federal income tax purposes. All supporting organizations must pass complicated tests intended to ensure that the supporting organization is not effectively a private foundation. In episode 23, I covered the general rules of the organizational test, the operational test, and the control test that apply to supporting organizations of all types. In episode 24, I looked more closely at the detailed requirements for Type 3 supporting organizations and two subtests there, the functionally integrated Type 3 and the non-functionally integrated Type 3. These rules were initially enacted in 2006, and proposed regulations were published in 2016. On October 13, 2023, the US Treasury released new final regulations that make some minor changes to the Type 1 test and more significant clarifications to the Type 3 requirements. In this episode, I'll outline the changes made in these regulations applicable to certain parts of the qualification criteria for supporting organizations. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. To recap the basic rules for supporting organizations as covered in depth in episode 23, in order to be classified as a supporting organization, an organization that intends to be a public charity under these classifications must satisfy 4 requirements in addition to otherwise meeting all the requirements of Internal Revenue Code Section 501c3. Episode 24 goes into an in-depth discussion of the Type 3 supporting organization rules. So again, to recap, here are the 4 fundamental rules for a supporting organization. Number 1, the organization must be organized to support or benefit one or more 509A1 or 509A2 public charities, with limited exceptions for organizations that support a labor union, business league, or member-supported 501c4. The second fundamental rule is the operational test. The organization must be operated, in fact, to support or benefit one or more of the specified supported organizations. Number 3, the organization may not be controlled by disqualified persons other than foundation managers and public charities. And number 4, the organization must meet one of the relationship tests. The basic idea of the relationship test for all supporting organizations is that they must be responsive to the needs and demands of the supported organization and also must constitute an integral part of or maintain a significant involvement in their supported organizations. The 3 types of relationships that are allowed are the following. Type 1, which is a supporting organization that is operated, supervised, or controlled by its supported organization. Type 2, the supported organization is supervised or controlled in connection with its supported organization. And finally, the Type 3 supporting organization is operated in connection with one or more publicly supported organizations. So the Type 1 and Type 2 supporting organizations accomplish the responsiveness and integral part requirements by the design of their control relationships. That is, in Type 1, they're controlled by the supported org or operated or supervised by it. The Type 2 is supervised or controlled in connection with a supported organization. So that makes establishing responsiveness relatively easy. However, a Type 3 supporting organization is not subject to the same level of control or involvement by its supported organization. So that is a very high-level overview of the rules for meeting the criteria for a supporting organization. So now, turning to the final regulations, which are the real point of this episode. The first part of the changes in the final regs that I want to cover are the new rules regarding the definition of the term control for a Type 1 or Type 3 supporting organization. Those two types, the Type 1 and Type 3, are not permitted to accept any gift or contribution from any person who controls the governing body of the supported organizations. The purpose of this rule is to close a loophole where a supporting organization is effectively operating as a private foundation because its donor controls the supported organization. So that makes sense. So generally speaking, the existing supporting org rules prohibit the Type 1 and Type 3 supporting org from accepting any gift or contribution of any size or any type from any person who, alone or together with certain related persons, directly or indirectly controls the governing body of a supported organization of the relevant Type 1 or Type 3 supporting org, or from persons related to a person possessing that control. Unfortunately, the Internal Revenue Code did not define directly or indirectly controls for these purposes. So these final regulations adopt a definition of control as proposed in the original 2016 proposed regulations with some minor changes to add clarity. The final regulations make clear that control exists if one or more persons described in the rules hold 50% or more of the total voting power of the governing body or have the right to exercise veto power over the actions of the governing body. These final regulations also make clear that even if persons do not have control by virtue of having 50% or more of the voting power or a veto power, all pertinent facts and circumstances will be taken into consideration in determining whether such persons do in fact directly or indirectly control the governing body of the supported organization. So moving on, the final regulations also set forth additional rules and requirements for Type 3 supporting organizations, including the following. 1, additional requirements to meet the responsiveness test for all Type 3 supporting organizations. 2, additional rules regarding the qualification of an organization as a functionally integrated Type 3 supporting organization, including specific rules for supporting organizations that support governmental supported orgs. And 3, additional rules regarding the required annual distributions for a non-functionally integrated Type 3 supporting organization. So a notable part of the changes made in the final regulations that I want to talk about now are the changes and clarifications to the rules for the Type 3 supporting organizations, which have 3 filters in addition to the general rules described earlier. These are a notification requirement, a separate responsiveness test, and a separate integral part test. The newly released final regulations add some nuances to these 3 tests. So first, let's talk about some minor clarifications to the notification requirement. The existing rules relating to the notification requirement require a Type 3 supporting organization to provide to each of its supported organizations for each taxable year 3 bits of information. First, a written notice addressed to the principal officer of the supported organization describing the type and amount of all the support provided to the supported organization during the supporting org's preceding year. 2, a copy of the supporting organization's most recently filed Form 990. And 3, a copy of the supporting organization's governing documents, including any amendments not already provided. These final regulations did not make any substantive changes to the notification requirements, but did add a clarification that the annual written notice may summarize all of the programs and services a supporting org performs for its supported organizations. The final regulations specifically note that a supporting org may summarize its activities directly furthering the exempt purposes of the supported org, as long as that summary provides sufficient notice to the supported org on the character of the activity and its related costs. The report must include a brief narrative description of the support provided and sufficient financial detail for the recipient to identify the types and amounts of support being reported. So the second area to talk about here is some clarifications to the responsiveness test for the Type 3 supporting organization. The distinguishing characteristic of a Type 3 supporting org and the basis for the public charity classification is that these types of organizations are responsive to and significantly involved in the operations of their supported organizations. Unless a Type 3 supporting org is responsive to each of its supported organizations, those organizations can't exercise the required level of oversight and engagement with the supporting organization. So Treasury noted in the discussion of the final regs that limiting the responsiveness requirement to fewer than all of the supported organizations could result in the necessary oversight and accountability being present for less than all of the supported organizations' operations. Treasury acknowledged there's a potential administrative burden on the supporting organization that supports multiple entities, and Treasury elaborated on an example which demonstrates a way in which a Type 3 supporting organization that supports multiple entities can satisfy the responsiveness test in a manner that can be cost-effective. The example shows that a supporting organization can meet this relationship requirement in different ways with respect to each of its supported organizations. The example also shows how a supporting organization can organize and hold regular meetings, provide information, and encourage communication to help ensure that its supported organizations, in fact, have a significant voice in the operations of the supporting entity. So, turning on to the complicated provisions of the integral part test for functionally integrated Type 3 supporting organizations. The final regulations address this area in several points. So the existing Treasury regs provide that for each taxable year, a Type 3 supporting org must satisfy the integral part test. The integral part test is satisfied by maintaining significant involvement in the operations of one or more supported organizations and providing support on which the supported organizations are dependent. So to satisfy this test, the Type 3 supporting organization must meet the requirements either for functionally integrated or for a non-functionally integrated Type 3 supporting org. So these are two different labels, and they're both very different types of tests. You would be one or the other, either functionally integrated or non-functionally integrated. The functionally integrated supporting organization meets the test in a few different ways. One straightforward situation arises when the supporting org is the parent of the supported organizations. So this is pretty straightforward. This design approach works well in a complex structure where you want to have one parent that controls a number of subsidiaries, essentially, but the parent itself doesn't fundraise or meet public charity support requirements. So it derives its public support classification from its subsidiaries, which are publicly supported from contributions from the public or in other ways. So anyway, the supporting organization is deemed to be functionally integrated if the parent supporting organization exercises a substantial degree of direction over the policies, programs, and activities of the supported organizations, and a majority of the officers, directors, or trustees of the supported organizations are appointed or elected directly or indirectly by the governing body, members of the governing body, or others acting in their official capacities of the supporting organization. The final regulations clarify these rules regarding a parent of an integrated system of supporting organizations. These final regs provide that the parent must direct the overall policies, programs, and activities, such as, for example, by coordinating the activities of the supported organizations and engaging in overall planning, policy development, budgeting, and resource allocation. The Treasury explanation of the final regs notes that a parent of an integrated system may also perform system-wide administrative services in connection with directing the overall policies, programs, and activities of the supported organizations. The final regs also clarify that a supporting organization could qualify as a parent of a second-tier or lower subsidiary. Thus, for example, if the directors of supporting org A appoint a majority of the directors of supported org B, which in turn appoints a majority of the directors of supported org C, the directors of the supporting organization will be treated as appointing the majority of the directors of both supported organization B and C. The final regs also clarify that the existing requirement that the parent organization must have the power to appoint or elect a majority of the officers, directors, or trustees includes the requirement that it also must have the power to remove and replace those officers, directors, or trustees, or otherwise have an ongoing power to appoint or elect with reasonable frequency. So moving on, another method for meeting the integral part test applies to organizations that are structured to support governmental entities. The final regs made a number of clarifications to the proposed regs relating to Type 3 supporting orgs of governmental entities. Most importantly, for this type of structure, the final regs clarified that a supporting org that intends to be functionally integrated with a governmental organization must maintain a letter from each government-supported organization or a joint letter signed by all of them, if supporting more than one governmental entity, that describes the coordination or collaboration efforts. So in other words, a supporting org has to have a written letter and notice from the governmental entities that acknowledge the fact that they're all coordinating and collaborating their efforts. So the final method for establishing satisfaction of the integral part activities test for the functionally integrated Type 3 organization is the but-for test. The but-for activities test if substantially all of the supporting organization's activities, meaning at least 85% of the supporting org's activities, directly further the exempt purposes of the supported organization. The new final regs address these rules and elaborate on the meaning of substantially all. The existing regs provided that all pertinent facts and circumstances are taken into consideration in determining whether substantially all of a supporting org's activities directly further the exempt purposes of its supported organizations. One comment to the 2016 proposed regs requested that supporting orgs be given the option of meeting the substantially all test on an average over a 3 or 5 year period. The comment also recommended that transition relief be provided if an organization did not meet the test over the most recent 3 or 5 years before the promulgation of the final regs. However, the final regs did not make any changes in this regard and rejected both of those ideas from that comment. Treasury did note that the substantially all test takes into consideration all pertinent facts and circumstances, which allows for some consideration of year-to-year changes in activities. However, Treasury noted that the proposed multi-year averaging test would be complex, create uncertainty about a supporting org's functionally integrated status at the close of each year, and would be difficult to administer. So for these reasons, the final regs did not adopt a multi-year averaging approach. So moving on from the functionally integrated Type 3 organization to everybody's favorite. That's kind of an inside joke. It's not really a favorite. It's very complicated. And that is the rules for the non-functionally integrated Type 3 supporting organization. While the final regulations don't make any changes to the attentiveness rules for a Type 3 non-functionally integrated supporting org, they do address a number of rules for determining the distributable amount required of the Type 3 non-functionally integrated entity. To recap, the required distributable amount that must be paid by a non-functionally integrated organization is the greater of 85% of the organization's adjusted net income for the prior year and 3.5% of the aggregate fair market value of its non-exempt use assets. So saying that again, that's the greater of these two measures, either 85% of adjusted net income or 3.5% of the fair market value of non-exempt use assets. This should sound very similar to those of you who are familiar with private foundation minimum distribution requirements. Some organizations were no doubt disappointed to learn that the final regulations are clear that there is no reduction of the distributable amount for unrelated business income taxes paid by supporting organizations, and also the proposal that program-related investments should count towards the distribution requirement was also rejected. The following is a short summary of the clarifications in the final regs for expenses that can count toward the distribution requirement for the non-functionally integrated supporting organization. First, the supporting organization's administrative expenses attributable to exempt activities are treated as distributions to the supported organizations if such expenses are reasonable and necessary. Conversely, the administrative expenses and operating costs attributable to non-exempt activities are not treated as distributions to the supported organization. Another category of expenses that can count toward the distribution requirement are fundraising expenses. These final regulations provide that expenses the supporting organization incurs to solicit contributions count towards the distribution requirement when the resulting contributions are received directly by the supported organization. But those fundraising expenses are counted, but only to the extent that the supporting organization's expenses for each solicitation do not exceed the amount of contributions the supported organization actually receives. And they count only if the supporting organization substantiates that those contributions were received as a result of the supporting organization's solicitation activities. This limitation is applied on a solicitation-by-solicitation basis. The supporting organ may not aggregate its expenses or the contributions a supported organization receives from more than one solicitation to determine the amount of the expenses that count toward the distribution requirement. The Treasury Department and the IRS intend that the contributions are treated as received directly by the supported organization when donors make their checks, credit card, or other payments payable to the supported organization. It is also intended that when a supporting organization receives checks or processes credit card or other transactions payable to its supported organization, the supporting org may count as distributions the expenses it incurs for soliciting those checks or credit card or other payments, but only up to the amount of contributions received directly by or paid directly to the supported organization and substantiated by it. The amount of the check or credit card or other contributions that are made payable to the supported organization. The contributions made payable to the supported organization that are transferred to the supported organization, however, may be counted as the distributions from the supporting org to the supported org at the time that the funds are given by the supporting org to the supported organization. There's also some clarifications to the taxable year in which the fundraising expenses are attributable, and there are some detailed clarifications of the written substantiation requirements from the supported organization. So that's all for this episode. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. Farella also now has several YouTube playlists that organize the podcast episodes by interest area, so be sure to look there for episodes applicable to your interests in the legal world of nonprofits. There are also some links in the show notes to prior episodes on these topics and the actual publication in the Federal Register of these final regulations. As always, if you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.